Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we'll do our commodity update, our daily technical analysis update, and I'll give you my financial opinion. So let's dive right in. We'll start with the dollar here. Here's the dollar. Again, we're right off that resistance support, I should say resistance line that we've tapped, gone up and tapped. We tapped it, we backed off the resistance line, and the dollar was pretty strong today. So this does look like it wants to go higher. We've got stronger upward pressure than we do selling pressure. I think the dollar looks like it wants to at least head higher here in the short term. The 10-year yield was lower today. It was down 1.24. This is confusing. This is a head and shoulders pattern. Shoulder, head, shoulder, with a neckline here where this could potentially fall back down. The only thing that I have that I'm curious on is the Federal Reserve creating this on the left-hand side? Are they buying these bonds to force it lower to send signals to the market? Usually, oil and the 10-year yield are very closely related. They're linked. And what we saw today is a release. Look at this. It says July 26th at 10:30 a.m. We had oil going up. And all of a sudden, we see U.S. to sell an additional 20 million barrels of oil from strategic reserve released today to what I think is to basically send news to the markets for you to sell oil. And that has an impact, and it ties to the 10-year Treasury yield, which they need to, they're trying to get this lower. They're going to be raising interest rates. It's ultra confusing that you'd have the 10-year yield go down while they've got interest rate hikes with high inflation. I think there's a whole bunch of meddling with the markets going on at this time. And it's very difficult to know if these signals are real or false, because they are trying to manipulate everything they can in their power to hold the inflation rate, the interest rates on the long end down. Also, ECB bond tool seen having no limits as steeper rate hikes loom. And they're talking about, I think, yield curve control, anti-fragmentation instrument expected to have soft conditions. This fragmentation, they just create words up. They create it up, create the, unlimited amounts of cash and manipulate what they want, when they want. But I think in the longer term, it's going to break apart. Short term, yeah, maybe they can hold it together. Long term, I don't think so. The CRB index heading higher today, up 0.61%. It looks good for a move higher, potentially. So that one looks good. Gold with that higher dollar and the lower 10-year yield, this is still showing strength. I think they're in here meddling with everything. That's what I think. I find it very hard to believe that gold has gone down with record amounts of inflation and injections in the system. Yeah, some people say that it accounted for it earlier in this 2020, 2021 type movement right in here. But we'll see what happens here. It does look positive for a potential move higher, given we've got a larger buying pressure candlesticks and then the smaller sell-off. This usually means it's turning, but it's difficult to say. They're meddling with everything. That's kind of my viewpoint there. Silver heading higher today. That looks better. We've broken the downtrend, getting a little bit of buying pressure above the support line. Looks good. And then platinum heading a little bit lower. We're right up against this resistance line. Just getting a little bit of selling pressure there. The XAU to gold ratio, we still haven't broken this downtrend in the short term. That's the first step, is to break the downtrend. But we did firm up a little bit today. GDX, a little bit of buying pressure. We're still below the downtrend. We're still trending lower for GDX. And SILJ, this to me looks good. We have a low here, and it looks like it's trying to fight to make a higher low. And then hopefully we can get the break here. We're right on that support line. That support line on a bigger picture view is this guy going across. We have a lot of support in this vicinity down here. So I think this is a great spot to actually be looking for a potential area if you want to be aggressive. Coming on down to crude oil. Crude oil was killing it. We were ready to break this to the upside. But no. We can't have that happen. We got to release 20 million barrels of oil from the strategic reserve and push the price back down. We can't let oil go up. That's inflationary. We gotta control, we gotta push, we gotta suppress, we gotta keep it lower. Natural gas also bouncing off its support or resistance line. Bouncing off resistance. Is this gonna head lower or is this gonna try to make a move higher? I'm not gonna try to make that prediction. I think that the market conditions support higher prices over the short term, medium term, and longer term. The only scenario where I think this could potentially go lower is in the fall of 2022, as we're between summer months and winter. But that the Freeport LNG facility ties us to, it will get a greater tie with the Freeport going back up later in 2022. I think that the pressures of this are higher. Natural gas is in a gigantic squeeze worldwide. And the pricing over in Germany and in Europe and Asia for liquefied natural gas is immense. So I think when the Freeport LNG facility comes back online, this thing's going higher. We'll break out of this longer term, basically cylindrical accumulation pattern to the upside. Now, some people are saying, well, it looks like a top to me. I don't think so, because we've got the entire commodity complex breaking out to the upside. We've broken out of this down, this basically consolidation period sideways here to slightly lower. We've broken that to the upside. This is going much, much higher, I think. This here is the uptrend move in natural gas. This is the consolidation. And then this is the break to the upside. I think we are going into a new paradigm where energy will be more expensive. And with world prices where they're at today, I don't see how natural gas in America, being as cheap as it is, will stay down here forever. Could this be a short-term top where we head lower? It very well could be. But I think that the medium, we'll call it the year out, I think this next winter, in the 2022 winter and 2023 winter, this is going to get tight. So natural gas, I think, is going to go higher here. XOP, yeah, you know me. Again, we could head a little bit lower. This could be an ABC correction. We had oil going higher. They definitely turned that around. This is basically an ABC, wherever it ends up, correction potentially. Would I buy more there? Yes, I would. But again, I'm not selling any of my shares. I'm holding on. And if we get a pullback because of whatever they're trying to do, I'm going to accumulate the pullbacks. We still have energy problems in the world. I think energy is the problem of what could potentially put the world into a recession. It's from energy. Could the demand come back? It very well could. Is it going to come back enough where prices of oil come back? It's possible. It's possible, but I think the problem is rooted in energy, and I'm holding on to everything that's energy related. I still think that we have a strong economy, that unemployment isn't increasing at the rates yet where it's at huge problems. I think that we still have more upside, but that is speculation there. Coming down to energy service companies, they also pulled back some. They still are lagging the exploration production companies. I still think this is a great spot to be looking at. If we get a larger, A, B, C correction out of this thing, then that's great. I would be accumulating that as well. We cannot get out of our current problem in energy without growing the energy service companies, I think. And we're going to have to grow our exploration production. And if we can't grow it, if there is limitations, physical limitations in this market where the decline rates finally outweigh the supply growth, then I don't know, we're going to have to go to uranium and nuclear for an entire different solution. But that's what I'm seeing there. Uranium, basically sideways for the futures prices. Looking at the Sprott Physical Uranium Trust, this is it, guys. This looks fantastic to move higher, way higher. We got a bullish engulfing the day before it. We have the false breakdown to the downside. We put a bullish engulfing here, another bullish engulfing here. This is going higher, guys. We've broken the downtrend. This is the perfect spot to be looking. And if you guys want help on my favorite companies, description link below is the Finding Value website, Platinum membership, and you can see all the companies that I've been adding into for the mining companies. Uranium, yeah, we got a small little down day, still looks good. Bigger buying pressure, smaller selling pressure. We've broken the downtrend line. That looks like it wants to go higher. This looks very solid for uranium. And, big picture view, we're at the bottom of this. We're using this as support. Hopefully we can get that big bounce and rocket launch higher. Hopefully. Again, that is not a prediction. We are playing with statistical probabilities. This has a high statistical probability chance of going higher. CCJ, just to kind of look at that, we're still above the support line. We just need the buyers to step in here and show us that they're not joking around. Lots of up movements in uranium. Lots of good moves there. And yes, I did accumulate on this pullback. As you know, on the Finding Value website question and answer session, when I was doing that. Here's copper, COPX. We're moving sideways. We did get a little bit of selling pressure today. It looks like it's holding in there, though. We've broken the downtrend. We're making our sideways movement, working off this downside momentum. Bigger, longer picture view, we're right on that major support area. So it's up to you on what you want to do. And remember, the way this thing falls is usually the way that it goes back up. It's not a perfect mirror. It's a similar mirror. That's why I have this drawn in sideways. This side is going to look like that side when it goes back up because the resistance and support levels are still all through here. So you hit those support levels and bounce around, very similar to how it goes up. But it looks good, and we're on support. We're trying to find that support. The CRB to S&P 500, looking at it, we've broken to the upside of this consolidation pattern. Higher is what I'm seeing. The money is still rotating. It is changing favorable for commodities in relationship to the S&P 500. So that is very good. That is something I watch. Coming on down, we're going to look at rare earth metals. Rare earth metals have broken to the upside, getting a little bit of selling pressure today, right on support. Looks good. We just need the buyers to come in here and do a little bit of pushy. Lithium is selling off. We have not broken this downtrend here. This I should say resistance line here. That's what we need to do next. We need to break that. Coming down, the S&P 500 selling off. Coming on lower here, but we're at support. And then we've got the US composite is not doing as well. It is pulling on back, going below the support level. I think they're trying to prop this up. I think they're trying to buy the 10-year yield, the Federal Reserve, that is, and they're trying to prop up the S&P 500. But the problem is the market conditions want money to flow to commodities. That's why the CRB to the CRB index to the S&P 500 is still going higher. They're trying to stop a gigantic move of money flows by controlling and manipulating oil and interest rates. And I don't think that they're going to be successful at doing it because the imbalances in energy are too large for them to overcome through financial measures. They are going to get caught on the wrong side here, and you're going to see an explosive move to the upside for oil, natural gas, and most likely inflation. Just like we've seen in Germany, it's going to happen in the United States. They're trying to delay it, I think, for elections, which is pathetic. But that's that there. Looking at XHB, the Housing Home Builders Index, you'd think if we were having a housing crash that this thing would look absolutely, horrible. But it's actually looking like it's trying to put in a bottom. It's got nice, good buying pressure in that circle there with small selling pressure. That looks to me like it wants to go higher. We've broken the downtrend, and it's actually holding up pretty good. Bigger picture view, we've broken this consolidation period that has lasted since the other bull market. We've broken to the upside, and now we're doing a return move. I think this goes back up. Am I crazy? I don't know. The chart is telling me that we could easily start to move higher here to the upside. Now, I'm not buying the home builders, but I do think that it's a possibility that we build a lot more homes over the next decade. It's a possibility. Looking at lumber did go lower today. We'll zoom in on the dailies here, but it looks like we're trying to put in a bottom. I always see this type of pattern, A, B, C, correction, and then we start to move higher. So we'll see if that is the case. We'll see if that's the case. Nickel moving sideways. This thing is being manipulated. JP Morgan came in over here and said, oh, don't worry, we'll take care of it. Bunch of articles. Go look at the articles. Nickel and JP Morgan. They're in there and they are actively manipulating this market. Look what they did to it. This market's dead for nickel. Weird, isn't it? We've got buying pressure in cocoa futures. Cocoa futures, you throw a nice little trend line in here and it's breaking to the upside. Looks fantastic. We've got wheat. Wheat looks, this is looking a lot better. We've put a nice big bullish engulfing. We've got a downtrend line. I'm going to cut it a little bit. It looks like it's ready to go if we can close above it. We've got soybeans breaking to the upside. Looks much better than what it was before. And corn is also looking better. All of these things are turning around. We've got copper. Copper is slowing that move down lower. I think we'll have one last little tail on this thing before we head higher. It's just what I've seen in history. Looking at the agribusiness, still looks good. We got a bloody nose today. That is a continuation pattern to move higher. We are still, if I were to draw a trend line in here just to see kind of where it's at, we're still below the trend line, but it looks like it wants to take a run at it. We'll see if it breaks through it. Aluminum's been, hanging out here. This might be a spot to be looking for potential investment because the momentum is slowing down. We're at support, and that's the spot you want to look at. So some of the aluminum companies, it's up to you on what you want to do. There are recessionary fears out there, and I don't know if that 10-year yield is trying to be manipulated. I think it is, but we'll find out. We'll find out shortly. And then we got the Baltic Dry Index slightly lower. This thing looks like it's slowing down above support. That looks good for a move higher eventually. It's still working its way up. But that's what I see in the markets right now. And every time we get some momentum in oil, they release more Strategic Petroleum Reserve or come out with some news to try to stop the move. It is very interesting that they do this. When we had that big silver squeeze, they came out with all these sell signals right as everyone was buying. It's pretty obvious that these guys don't want this stuff to go higher. JP Morgan, that is, and the government and the Federal Reserve. They are in there trying to actively manipulate things. I think that's why you see such a large difference in physical metals prices versus the paper prices. And I know people get really hung up on the premiums. Oh, I'm not going to pay that premium. Then don't own the metal then. I mean, that's what the physical price is. We're starting to see that divergence. The mining companies much more are correlated to the paper price. So it may take a little bit longer for those mining companies to get out of their funk. But I think it's all coming. And I don't think they can hold it down forever. So if you guys like this analysis, give me a thumbs up. Subscribe to the channel. Subscribe to the website in the description link below. Platinum membership if you guys are interested in learning more about financial education on commodities, about certain companies that I like. I have natural gas companies. I got all sorts of stuff that I think are highly leveraged to the price moves when we break out. But that's what I've got for today. Hopefully you guys are all having a good day, and we'll catch you next time. This is Finding Value.